Hi, my name is Brian Mahoney of briansmahoneyonline.com, and welcome to Stock Market Basics. A stock market or equity market is the aggregation of buyers and sellers, a loose network of economic transactions, not a physical facility or discrete entity, of stocks or shares. These are securities listed on a stock exchange as well as those traded only privately. Stocks are petitioned in various ways. One common way is by the country where a company is domiciled. For example, Nyse is domiciled in Switzerland, so they are part of the Swiss stock market. At the close of 2012, the size of the world stock market was about $55 trillion. In terms of by country, the largest market was the United States at about 34%. Followed by Japan at about 6% and the United Kingdom at about 6%. This went up more in 2013. Stock exchanges. A stock exchange is a place where trade stocks. A stock exchange is a place to trade stocks. Companies may want to get their stock listed on a stock exchange. Other stocks may be traded over the counter, that is, through a dealer. A large company will usually have its stock listed on many exchanges across the world. Market participants include individual retail investors and traders, institutional investors such as mutual funds, banks, insurance companies, and hedge funds, and also publicly traded corporations trading in their own shares. Some studies have suggested that institutional investors and corporations trading in their own shares generally receive higher risk-adjusted returns than retail investors. This may be attributable to their tendencies to hold investments for a longer period of time. Trade in stock market means agreeing on a price in which both parties, buyer and seller, agree to trade a product. In this case, the transaction of shares, which represents an equity or ownership interest in a particular company. Participants in the stock market range from small individual stock investors to large hedge fund traders, investors who can be based anywhere in the world. Their orders usually end up with a professional at a stock exchange who executes the order of buying or selling. Some exchanges are physical locations where transactions are carried out on a trading floor by a method known as open outcry. This type of auction is used in stock exchanges and commodity exchanges where traders may enter verbal bids and offers simultaneously. An example of such exchange is the New York Stock Exchange. The other type of stock exchange is a virtual kind, composed of a network of computers where trades are made electronically via traders. An example of such an exchange is the Nasdaq. Actual trades are based on an actual market where a potential buyer bids a specific price for a stock and a potential seller asks a specific price for a stock. Buying or selling at a market means you will accept any ask price or bid price for the stock respectively. When the bid and the ask price match, a sale takes place on a first-come, first-served basis if there are multiple bidders or askers at a given price. The purpose of a stock exchange is to facilitate the exchange of securities between buyers and sellers, thus providing a marketplace, virtual or real. The exchange provides real-time trading information on listed securities, facilitating price discovery. The New York Stock Exchange is a physical exchange with a hybrid market for placing orders both electronically and manually on the trading floor. Orders executed on the trading floor enter by way of exchange members and flow down to the floor broker, who goes to the floor trading post specialist for that stock to trade the order. The specialist's job is to match, buy, and sell orders using open outcry. If a spread exists, no trade immediately takes place. In this case, the specialist should use his or her own resources, money or stock, to close the difference after his or her judged time. Once a trade has been made, the details are reported on the tape and sent back to the brokerage firm, which then notifies the investor who placed the order. Although there is a significant amount of human contact in this process, computers play an important role, especially for so-called program trading. This is the end of part 1 of Stock Market Basics. Please move forward to part 2.